Chief Marketing and Operations Officer at SONAR, joined again today by Malcolm Harris, host of What the Truck and at least part-time host of FreightWaves Today.
I think my title here at FreightWaves Today is I'm a jag, just a guy. You know what I'm saying? I'm just here to, just here to fill in, and I'm super excited to be here. Yesterday was such an awesome show.
It was.
We've had some great conversations, great guests. We have some awesome guests in store. Just looking at the beginning of the rundown, we definitely got some stuff in store for the next 2 hours.
Yeah, I felt smarter leaving yesterday than before we did the show, for sure. I learned a lot. And yes, we have a great list of guests for you guys today. We have Nora Sprin of Risk Reward Consulting. We have Jared Westfield from RXO for our Capacity Now segment today, which I'm excited to talk about. Hans Stigmuller, the CEO of Odyssey Logistics. We have Zach Myborg, the CEO of Myborg Company. We're going to talk a little bit about hours of service and some things going there. Really cool that he is a third-generation driver and now runs 225 trucks and has a lot of insight on that and what's happening in the industry. And then we have our very own John Kingston, editor-at-large for FreightWaves, to talk about what's happening in the oil market and some other interesting stories he has written lately. So yeah, lots of cool stuff for us to talk about for sure. We'll have our SONAR update, of course, and get into what's happening in the market as we are getting closer and closer to end of month, end of quarter, and the July 4th holiday.
Cannot believe we are already at the end of Q2.
Yeah, I can't believe we're like
halfway through summer.
Yeah.
That part is the part that's killing me. I feel like
I haven't
done any of the summer stuff yet.
No. I really have been to the pool all of 2 times. I really haven't grilled like I've wanted to. It's just, I think once we get to the 4th of July, we'll take some time, relax, recalibrate, and we'll get ready to go.
Sure. Yeah, we'll tell us that.
You're the busiest person, and telling you, you're about to hop on a plane as soon as this ends and go out to Vegas, and I'm excited for you, and it's going to be a good time, but we got some work to do before.
Tomorrow will be a great show as well. So as a reminder, we will be live from Las Vegas at the Samsara Beyond event, so we will be on at 3 Eastern, noon Pacific. So we're pushing it back to the time zone we will be in locally tomorrow, but still really great content, and we will still be replaying at the same normal times and posting clips, so hopefully you'll tune in.
Let's go. I'm excited. This is going to be a good one. It's going to be a really good one.
Yeah. All right. With that, we will get to the Morning Minute and what's happening in the news headlines.
With a pair of regulatory wins for the trucking industry, as the Federal Motor Carrier Safety Administration officially scraps 2 long-standing compliance burdens. In final rules published Monday in the Federal Register, FMCSA eliminated the requirement that commercial driver's license holders self-report traffic convictions to their state licensing agency, a mandate that dates back to the Commercial Motor Vehicle Safety Act of 1986. The agency concluded the requirement became unnecessary after state driver licensing agencies fully implemented the exclusive electronic exchange system in 2024, which automatically transmits conviction information between states through the Commercial Driver's License Information System. Separately, FMCSA also axed the rule requiring trucks to carry a printed copy of the operator's manual for their electronic logging devices at all times, calling it a regulatory burden without readily apparent benefit, given that digital versions are built into the devices themselves. Over in the less-than-truckload sector, Saia is aggressively expanding its physical footprint after a year-long pause. The LTL carrier announced it has opened new terminals in Duluth, Minnesota and Columbia, Missouri, marking the 3rd consecutive month of expansion after opening no new facilities at all in 2025. The latest expansion follows May openings in Marysville, Washington, and Edinburgh, Indiana, and an April opening in York, Pennsylvania. Saia's CEO revealed on last month's earnings call that the company has invested approximately $1.8 billion in its network and fleets over the prior 36 months, representing more than 19% of total revenue during that period. However, Saia's CFO acknowledged these newer terminals are still operating at an operating ratio in the upper 90s, well above company average, though margins improved by over 2 points year over year in the first quarter. Finally, the trucking community delivered overwhelmingly positive feedback on FMCSA's move to eliminate the printed ELD manual requirement. The agency opened a comment period on the proposed rule on May 30th, 2025, and the 60-day window generated 24 comments from major organizations, including the American Trucking Association and the Owner-Operator Independent Drivers Association. The split was divisive. 18 comments supported the change, only 4 opposed it, and 2 were described as out of scope. Supporters argued that ELDs routinely have electronic versions of the user's manual built into the device, and that maintaining a physical manual created unnecessary inspection violations that could affect carriers' safety measurement system scores without improving actual safety outcomes. But it does seem duplicative and unnecessary to have a paper copy of your logs in addition to a device that does it for you, right?
That's what I was really curious about, right? Because I mean, to me, and we talked about this a little bit on What the Truck yesterday, it almost feels like the industry is still stuck in 1986 and not necessarily 2026. So I'm very curious, like I understand checks and balances, and don't get me wrong, but also it makes me like, why? Why is it still a concept? So that's something we definitely need to discuss. I mean, what are your
Because
thoughts?
one would think that even if there was an issue with the onboard logging device, that's backed up somewhere
Right.
within the organization and can be produced.
Right.
Or that the rule would say, if your ELD goes down, then you have to have paper logs, right? But why would you have to have both? And maybe I don't understand it that well, but
And I could say the very same for me. I mean, I think we're all learning. That's what's so cool about FreightWaves Today is that we talk about these concepts, but I think there's bigger pressing issues because still, when it comes to technology, the 50 states, they don't talk to one another. It feels like it's a different system in each and every single state. So I think that would be a more pressing issue, no?
yeah, I think there's a lot of issues. And I think we'll talk a lot about that with our second block guests,
somewhere in there.
the second half of the show today, and about hours of service and some things along those lines, which I think we will both learn a lot about. But my first job was in the industry was opening driver packs and scanning in driver's logs
Really?
so that we could digitize them when they mailed them in. They would send packs of, I'm so much older than you. They would
No, you're
send
not.
packs with their scale tickets, like any other receipts, like truck wash receipts, whatever else they had, and their logs for the week. And I would open them every week and scan them in to digitize them.
Wow, look at you. And now look where you're at today.
I mean, it was an internship. I learned a lot.
My first job was actually, ironically, for a company that we're going to be speaking with today,
Oh, yeah?
RXO. I was a former coyote, and yeah, it was my first official welcome to the industry was as a domestic broker at Coyote. So, but yeah, definitely, I'm excited to speak with Kingston about these, things because, yeah, I think he'll have a lot of insight and be able to, answer a few questions that I have.
Yeah. Okay. The other headline that I think is really interesting
Yes.
is Saia growing their LTL footprint. So that's really a huge amount of facilities to open in this amount of time, right? So 5 new facilities in 2026 after not opening any in 2025. The other thing that I found interesting about it is that they did openly admit that those new facilities are operating in the high 90s, and it just reminds you of how hard it is to make money in a trucking company and how high operating ratios are and how low margin it is compared to some other industries.
There's a lot of, and we talked about this yesterday with Jason and Provence with Steam, making these bets, right, for your organizations and taking calculated risk. We talked about this a little bit on What the Truck yesterday with Echo and their move going into Mexico fully. I think with Saia, I think they're not necessarily making the move for today. I don't think that's the case at all. They're trying to set themselves up for 4 to 6 years in the future to see, all right, how can we get ahead of this and kind of position ourselves for not today, but for the future. So to me, I think it's a great move, but also it's like you can't look at today and you have to be a forward thinker. And I think a lot of people in the leadership there are indeed that.
Yeah, and I think some cases with moves like this, you have to do it when the real estate's available too.
Oh, for sure.
We talked to Webestis about how well it worked out for them to acquire some of both the real estate and the equipment from Yellow.
Yeah.
And I don't know enough about this story to know where this real estate or where that came from, but sometimes timing is not only based on like what's happening in your business in the market, but what's available and when you can make it work too.
Apparently it's the M&M, so it's Minnesota as well as Missouri. Those are the 2 spots.
Those are the 2 most
PA, Indiana, and somewhere else before that.
Yeah.
So yeah, they're expanding. Certainly, it sounds like the whole sort of eastern and Midwest, northeastern part of the country.
They're putting their money behind and where their mouth is too. So I'm curious to see how this is going to shake out for those at Saia. And they've always, in my history in running LTL as a broker, it was a go-to option for me. So it seems like they're definitely going to double down on the investment and keep on with the good performance and what they've been able to do over time. So
we are having, I think, some technical difficulties with our next guest. So I want to ask you a little bit about, tell me what's happening on What the Truck this week, what some of the most interesting conversations have been, and then we'll probably take a quick break and then get back on schedule after that.
So we talked a little bit yesterday with two people. The first was Greg Braun. He was the Chief Revenue Officer at C3 Solutions. They just came out with a dock management report, just basically getting their findings about what's happening at the docks around the country. So I was very, very impressed with Greg, had an awesome conversation. Yeah, no, I'll definitely send you the link because it, to me, is just showing, all right, like, yes, there's innovation, but also the human component is something that cannot be replicated. And I thought that was really interesting. So there's a lot that I saw, and I'm going to steer you guys back to the episode because I want to get those views up. So I'm going to, lightly touch on it. But Greg was absolutely outstanding, and the whole team at C3 Solutions doing a wonderful job with what they have as well. And then from MCA Connect, Steve Shabuski, all right, so he's their VP of Sales. We got into agentic AI, all right, and it's a very fascinating concept. Of course, we are an AI-driven organization here at FireCrown/FreightWaves. I don't know if you know this. Claude is down right now. Did you know that?
I saw it in our SONAR Slack channel that Claude was having some real issues this morning.
Yes.
I actually, I use Claude a lot. I had not looked into it or logged into it today, so I wasn't aware other than I saw those messages.
I feel like Iron Man without his powers. You're seeing Malcolm Harrison in his real time because I use Claude from the time I wake up to the time I go to sleep. I literally feel like it is my assistant. So yeah, it's weird, and I think that this, in times like this, it shows that you can't necessarily be reliant fully on AI. One, number two, the human component is always going to be something worth having. So that was the overall theme of yesterday's show. Tomorrow we're going to, of course, have Michael Vincent back in studio. I'm excited to see my brother from another. Going to get to a lot of different headlines and things that we've had happen. Specifically, there's a couple articles that we'll talk about in the morning that I think could be reflected here as well. So some good stuff on the way.
Good. All right. Well, I think we are going to take a quick break, and then we'll be right back with Jared from RXO. Or are we going to Jared now? It's National Safety Month, which makes this a great time to ask how your fleet can prevent more accidents. Samsara AI detects risks in real time, giving teams more visibility into what's happening on the road and more context to coach drivers before risky moments become incidents. Fleets using Samsara Complete AI Safety Solution have reduced crash rates by nearly 75%. See the data behind the results in the Samsara Safety Report at samsara.com/freightwaves.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara Driving Coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
What's the masterclass all about? Well, here's what I'm going to tell you. If you're a driver, you're an owner-operator, you're a fleet owner, whether you're in compliance services, dispatcher, no matter what it is, masterclass is for you. Every 2 weeks, you're going to sit down with me, and we're going to go over certain business topics that are related specifically to your small trucking company operations. We're going to help you with everything from compliance to how to negotiate better on the spot board, how to find direct freight, and everything in between. This is the reason why you don't want to miss out on Masterclass. It's about an hour to an hour and a half, and then on top of that, you'll have the library to you so that way you can always research and reflect back onto it. Don't miss out this opportunity. This is built specifically for you. I'm excited and I hope to see you in class.
Imagine a world where your freight moves as fast as a digital pulse. What if your visibility didn't just tell you where a truck was, but exactly where it needed to be 48 hours from now? Think of a logistics network that corrects its own mistakes before they cost you a single dime. What if your supply chain could think for itself? Imagine AI agents negotiating rates in milliseconds, predictive models that solve labor shortages before they even happen. This isn't science fiction, it's the agenda. On July 15th at the historic Old Post Office in Chicago, FreightWaves presents the Supply Chain AI Symposium. We are defining in real time how AI is embedded into every mile, every warehouse, and every handshake. Because in 2026, the future isn't just coming, it's already negotiating. The FreightWaves Supply Chain AI Symposium. Secure your spot now.
A SONAR update and dive into the SONAR data from Craig. He filmed this live from Las Vegas as he's preparing for the show. So we'll get the SONAR update and then we'll be right back to talk about capacity now.
Hey everybody, I'm in Las Vegas today. I'll be at the Samsara Beyond event. It's their annual user conference. Please stop by. We'll be streaming live tomorrow, 3 p.m. Eastern or noon Pacific, Las Vegas time, here live on the floor. I want to talk about the market conditions and the fact that we're going into July 4th, because while we are not seeing the significant increase in spot rates on the daily were actually down to 356. It's dropped of about a dime from overnight levels. It still is going to happen. We're going to see markets tighten as we head into July 4th. In fact, when we look at tender rejections, we are starting to see them move up. They were at 16.5. Now they're above 17%, jumped about 50 points overnight, which is a real strong sign. This will continue throughout the week, I believe, and into next week, frankly, because it happens every single year. Even in the most dismal depths of the freight recession, we saw increases in tender rejections, and they would surge going into July 4th. So it happened again this year. Spot rates are just a reflection. Spot rates actually lag tender rejections typically slightly, and we would expect that to happen. Tender rate rejections will increase throughout the week, and then we will see spot rates increase as we head into this weekend and certainly into next week. So watch for that. Just a lot of attentions on the market right now, and rightfully so. This has been, I wouldn't say a bad June. It's actually been quite good and quite robust, but it hasn't had the significant surges, and I think that's okay. We're not going to continue to see these massive surges in periods where there isn't a catalyst, but July 4th is going to be that catalyst, and so we'll see where we end up. Do we end up getting to 20% rejection rate? It's possible. Would not be something I think any of us would be surprised about, but that would be really high levels. There was a housing bill that was passed overnight in the Senate, or yesterday in the Senate, that will really have a big impact on the housing market. It's now expected to go to the House. Because of the large amount of support that it actually had, we can expect that the House will likely support it, and then Donald Trump will sign it. And I think one of the important things to note there is that the housing's been one of the parts of the freight market that we haven't seen perform. It's been really soft. Housing's a big piece of freight. It's new home construction as well as people moving. That's as much as 20% of a typical freight market. But really, housing's been sort of has been sitting out the freight market this year. And really for the last couple of years, it hasn't been a participant. But if we do see surges in the housing market, then we will start to see that show up in freight markets. And it's something that I think everyone would be relieved about, particularly in flatbed. We'll see that all the flatbeds benefited from AI data centers, energy, and defense build out. It will get an additional pulse on single family home builds, which could have a pretty big impact. So we're going to watch that and see what ends up happening over the next couple of weeks with this housing bill. It's expected to pass the House because, again, congressional folks, this is midterms. They're worried about getting election. Housing affordability is the problem. I talked to a major building supplier, and asked them, what is their prognosis on the housing market? And they said, look, it is all about housing affordability. I even asked if interest rates had a big deal. They said, no, not as big as affordability. There's a big problem of affordability across the country. And that is what is holding back housing starts and people moving is they just can't afford homes. And this bill aims to address that. One part of the bill deals with private equity purchasing homes in bulk, but that just provides clarity because a lot of banks were worried about lending on those portfolios. A lot of builders were worried about starting construction because of that. But I'm told that is only one piece of it. But a lot of people are sort of sitting out the market waiting for resolution on that. And some builders that I've talked to said that will be a positive thing. But it all comes back to affordability. A lot of this has to do with permitting, environmental regulations, just trying to get through the process of building a home. This NIMBYism that's taken over America over the last couple of decades is the problem. And you can see it in cities where they have very tight restrictions and zoning and rent control and things like that is holding back building of homes. And this is just one of those things will address it. It won't address things at the state level, but it does address things at the federal level and does provide incentives to home builders to take some of those risks. One of the other features is it goes in and provides incentives to take in older homes that perhaps need to be remodeled, and that creates a lot of inventory because homes that have have not been maintained are not easy to sell. They're not desirable. Therefore, by doing that, we can effectively get more inventory on the market. And of course, all of this is good for freight markets. Not only is construction and materials important for freight markets, and we know things like carpet and things like just drywall and lumber and all the things that go into building homes is important. But you got to remember that when people move into a house that's new to them, they end up buying furniture, appliances. They end up buying everything from artwork to just all sorts of stuff that's in a new home to them. And that's a big piece of the freight market is that secondary sort of element in terms of people moving into new homes or moving into homes that are new to them. And so I want to watch that. That's an important factor. And I think if we get housing performing, then this freight market is absolutely going to position to rip for many, many years. And if we talked about the super cycle, we know it's a compliance thing. We know that industrials are coming back. The part of the freight market that we haven't seen is housing. If we get it, then all bets are off as to how strong and how long this market recovery and how strong this freight market could be for many, many years.
All right, so a lot in that update
Wow.
from Craig this morning, which I really, really love. So we talked about tender rejections as a whole.
Yes.
They leveled out. They're starting to rise again, back over 17%. So while spot rates are down a bit, tender rejections are up. That's usually a precursor to spot rates. So we've been waiting for that, end of month, end of quarter, into July 4th, sort of surge in spot rates and in volumes. We're not seeing it in rates yet, but since we're seeing it in tender rejections, it'll likely very quickly follow in rates. So as to be expected. So I thought that was great. Looked at flatbed tender rejections and how they're kind of leveling out and then tying that into the housing market, right? So after I went through this morning, I did pull a chart comparing flatbed volumes with housing market starts. And I guess intuitively I knew that they would line up, but then when I actually looked at it, they really lined up.
Really?
Which I thought was really interesting because we have talked. Yeah, there it is. So the first is the blue, the mountain part is housing starts. The green is flatbed volumes. Yeah. So, the volume index. We've been talking so much about the industrial economy having such an effect on this, and it is, and the AI building, data center builds out and all of that. But I think that's kind of an anomaly as we're building out and putting so much money into that. And then what's going to happen to flatbed as we get back to normal, right? Once those are built, and then it's to the fitting section, where they're fitting those facilities out, which is van freight versus the flatbed is the steel and all the things that go into it. So seeing how tightly aligned the flatbed market is with housing, it'll be really interesting to watch what happens with this bill and what happens with the new housing starts in the next few months and into next year. As Craig called out, I think that it is the part of the, we haven't seen auto or housing pop, which is sort of anybody who's on the fence on if we're in a tight market and it's going to continue or not keeps saying that the reason that they're not sure if this market has really flipped and if it's sustainable is that there hasn't been a demand surge, right? There's been capacity exiting, which is different from any other seasonality or any other freight market we've seen, or I've seen in my career anyway.
Same.
So waiting for these demand surges, and if housing starts to come back, then it likely is an opportunity to finally see that demand surge.
I really thought the update from Craig was one of the best ones I've seen since we've had FreightWaves Today, just because I really didn't, and this has always dawned on me, right? Yes, housing as well as freight, they really do intertwine, but I guess in my brain, I just wasn't really keen on the fact that, hey, like there is such an impact whenever housing is strong, and there is an affordability issue right now. I mean, even in, Chattanooga, there's multiple projects, quote unquote, like not necessarily family, but just multi-demographic projects that are popping up left and right because of the affordability aspect. And this is a playbook that's happening in major cities right now as we speak, whether it's the AMR being able to have like a certain level. So when I tell you, like, I get what he's saying, but it really didn't dawn on me until I sat here and listened. I'm like, wow, this really does, from an affordability standpoint, because if folks are moving into homes, right, you do have the furniture component, you do have electronics, you do have lumber, you do have all these different components that come with new
You go buy
development.
new shelving for your closet. You go do, all of those things. The thing that Craig gave the stat, and I don't remember, 20% of the freight market, up to 25% of the freight market can be influenced by housing. And I don't remember the number off the top of my head, but every new housing start is either 8 or 13 truckloads. I don't know. We'll have to look that up in the break and then find out. But yeah, it's a huge driver of freight demand. So we'll be watching it closely.
It's exciting. I think in the near future, I'd love to get like a builder or a developer on the show that also has freight ties as well, from either a brokerage or some type of. I can think of one too.
Yeah,
Wink,
we'll see.
hint,
That'd be
hint.
so fun. All right, with that, we are going to get into our Capacity Now segment and welcome Jared Westfield, the Chief Strategy Officer at RXO, to the show. Welcome, Jared.
Hey, Jared.
For having me. Appreciate it.
Yeah, it's great for you to be on. So tell us, where does capacity stand right now? What's the market telling you? What's the latest?
Yeah, so we continue to remain in a tight freight market. Would very much echo everything that Craig was saying. You look at overall industry-wide tender rejections; they're sitting at about 17%. And I think what needs to be put in context is industry-wide tender rejections at 17% with a muted demand environment. And I think the housing commentary is spot on. Housing can be as much as 20% of the overall freight market. Every new home, to the quote that you were talking about, is generally 6 to 8 full truckloads. So to not have housing participate in the current market and to have overall industry volumes be down year over year with 17% plus type tender rejections, I think just speaks to how tight of an environment that we're in right now. And any type of incremental demand could further go ahead and send the market into additional imbalance. So very tight market, and you continue to see certainly differences depending on which geography that you're in. But overall, industry-wide line haul rates are up about 40% year over year, despite muted demand.
Jared, it's really good to see you once again. I want to just ask a question. A lot of people live and die by spot. What are you currently seeing right now? And most importantly, where are we headed in terms of the spot market right now?
Sure. So when you look at RXO really built its book of business with large contractual volumes. And that's how we built the business over time. And our view has always been you service the contractual freight with our shippers incredibly well, and we'll get rewarded with special projects and mini bids and spot opportunities. And that's exactly what we're seeing. So if you think about RXO's spot mix over the last few quarters, in the fourth quarter, spot as a percentage of our truckload mix was about, call it 28%, moved 500 basis points sequentially higher into Q1, 33%, moved another 200 basis points higher into April at 35%. We put an announcement out the other week where it moved higher again into May. So you continue to start to see spot increasing as a percentage of our mix in the context of a market that continues to remain undersupplied relative to the amount of demand that's out there. And I think that just speaks to the fact that at the end of the day, shippers are going to go ahead and rely on their strategic partners that have the ability to service freight throughout all the market cycles. And that partner certainly is RXO for many of the shippers that are out there.
So that contract to spot mix changing, is part of that intentional based on spot rates continuing to rise? Or is that truly just based on what shippers are calling you with a need for because their routing guides are breaking down and then they're tendering them to you all as spot?
I would think about it in the context of it's how our model is designed to operate, where when there's not that much spot freight available, you'll see contract as a higher percentage of our mix. When you start to see spot increase as a percentage of the mix, we're still going to hold the contractual freight, but we'll then have additional spot opportunities on top of that. So I think it speaks to not only additional spot opportunities, and we're certainly leaning into the opportunities that are available to us because we want to make sure that our shippers have the ability to move the critical freight that they need. So I think it's certainly a combination of both a function of the model that we've built, as well as us leaning into spot opportunities to make sure that we are servicing our shippers.
Seen it, and you certainly mentioned it, capacity continued to tighten, but not necessarily because of vastly increased demand. So that being said, in a market like this or in a normal market, what is the number one signal that you watch and track in order to know, where that position within the market lies and where we're headed?
Yeah, so it's such an important point that overall tightness in the market that's happening right now is really a function of supply, not really demand. If you look at overall demand, it's still down year over year for the industry. But if you look at the amount of capacity that has come out, I mean, the FMCSA has sized the non-domiciled CDL capacity that's coming out at around 200,000 CDLs over the next few years. You then combine that with English language proficiency. You combine that with the interpretation of road signs, and you look at all of the elevated insurance costs that are structurally moving higher across the industry. There's a lot of pressure on carriers right now, and you look at the size of the non-domicile. You look at the size of the total CDL market in the for-hire portion. We think that's probably between 1 and 1.5 million CDLs. So then you look at the non-domiciled portion of it, the English language portion of it. I mean, you could be talking about 20 to 25% of capacity that might be structurally leaving the market. So that is not a trivial amount, and that really is driving the increase in spot rates and the increase in tender rejections that we're seeing right now.
Jared, you've touched on this a little bit on both sides, but I'd like to kind of reiterate it if you don't mind. Could you break down behavior right now that you're seeing from not only the shipper aspect of things, but also the carrier aspect as well?
For sure. So on the shipper side, I would say shippers are looking to bid now with larger, more frequent mini bids to get their routing guides back in compliance. Right. So when you talk about a tender rejection environment that is approaching 20% without muted demand, you start thinking about what could happen when demand returns. What could happen if there's a peak season in the back half of the year? And shippers need to be prepared, especially shippers that deal with RXO. We're dealing with some of the largest shippers in North America. And largest shippers in North America, you know what they want? They want predictability, reliability, and high levels of service. And for that to be true, they want to go ahead and put as much as they can into contract. So as we think about the more frequent mini bids to get routing guides back into compliance to ensure that reliability, I think that's a really, really big deal. On the carrier side, I think, I'll reiterate what I said before. There is tremendous pressure out there right now on the carrier side in terms of structural cost increases. If you look over the last 10 years, you've seen almost a 35% increase in the cost to the carrier. Think about tires, insurance, roadside assistance, everything required to go ahead and operate an authority. It's a lot of inflationary pressures. You then combine that with, most recently, you're seeing some relief now, but most recently with elevated diesel prices. So I think ultimately, while you're starting to see some relief in spot rates, certainly with them up 40% year over year, don't underestimate the amount of pressure that has been on the carrier community over the last several years that has been, inflationary in nature in terms of those prices.
Yeah, I agree.
great.
Are there certain regions or pockets of the company where you are seeing capacity significantly more tight?
Yeah, I'd say, specifically if you look at, maybe more of the border towns, there are generally less drivers on the road. I think B1 visas are specifically hurting those border towns, and you're seeing certainly fleets across representing pretty significant reduction in capacity. But overall, I'd say it's still pretty tight across the country. One thing that's particularly interesting is that this market tightness is really happening without not only without the help from housing, like we just talked about, but overall import volumes to the West Coast have generally been pretty soft. And if you look at some of the leading indicators that are out there, they do suggest a potential increase for import volumes over the next few months. So it'll be really interesting to see if you have that increase in import volumes, how does the country sort of rehandle that redistribution of capacity? And do you start to see further pressure on the West Coast, which would further increase tender rejections from where they already are?
Yeah, so I pulled a map this morning of the SONAR truckload volume index, and interestingly enough, one of the darkest blue regions in the country, which means the highest increase in tender volumes, was that Southern California area that you can see there, all the way down into San Antonio in that Inland Empire, or San Diego, and that Inland Empire area where freight is brought in from the ports and then brought into those warehouses. So that aligns a lot with exactly what you're saying. Okay, so break it down. If you are a shipper trying to get ahead of this tightening market, what do you do now? What should they be doing now?
Shippers should be having proactive conversations with their strategic partners like RXO to make sure that they've got the right contracts in place to be able to move their critical freight between now and year end. When you think about the market tightness that is occurring right now, this is in the context of a muted demand backdrop. And ultimately, I'll go back to what I said earlier. We're seeing a lot of activity with shippers wanting to do more frequent mini bids to get their routing guides back into compliance. I think in this environment, more so than many, shippers should be dealing with large scaled providers and trusted providers of transportation like RXO to make sure that they've got access to the latest technology, the best service that's out there, the most rigorous compliance standards in terms of carrier requirements. I think that'll give them more predictability and reliability when they think about moving their critical freight in a market that is already fairly tight.
Jared Weisfeld, Chief Strategy Officer at RXO. Thanks for being on the show. If you need capacity now, RXO is your go-to.
Thanks, Jared.
Absolutely. Thank you so much.
All right, so we want to welcome Norris Buren, the founder of Risk Reward Consulting, to the show. We've talked a lot about the SCOTUS ruling and the Montgomery case over the course of the show so far, and with quite a few of our guests, but I'm excited to have Norris here and get a little bit of a different take on it and take it further than just the broker, but also to the shipper. So Norris, can you tell us a little bit about Risk Reward Consulting and then your take on this SCOTUS ruling?
I've been running around with trucking companies and freight brokers, helping them do a lot of things over the last 45 years. So I feel pretty comfortable talking about some of the issues that we're going to cover today. But the real important story is that the media did a really good job of covering the freight broker liability exposure that resulted from the Supreme Court case. The real story is the Montgomery did not address the shippers. Well, the shippers were already exposed. But since now the brokers have been subject to losing fragility, we need to look at the shippers, and that's the real governance story. Shippers have a responsibility, like the brokers and the motor carriers. And what I want to make sure that we understand is that boards of directors at companies are responsible for the exposure of losses and damages, potential claims that occur. And as a result of that, the shippers have not been getting anywhere near the level of attention that they need to. So I'm trying to get the word out. In fact, I have not seen anything so far in the media about the talk about the Montgomery case as respects to shippers. So the problem that we face is you need to begin to build what I call a defense, a protocol of defense documentation of how you're vetting your brokers, the information that you're getting, monitoring that and staying on top of it, so that if you do have a claim that may come up a year from now, 2 years now, you can produce the evidence on the discovery call. You can see evidence in a deposition, and if you do it properly, my assumption it would be that you would be in a position so that a jury would say that you have done so well in your preparation, maintaining your stability, that as respects to the shipper, the case is dismissed and then move on. That's really what I'm trying to do, is make sure board of directors and shippers generally know they have a responsibility that has not been mentioned yet.
Norris, thank you so much for being here. I want to ask a question. If you are making a checklist as a shipper, right, and you are talking to brokers, whether it's a large broker or a small broker partner, what are the non-negotiables given this decision out of the Supreme Court that is a must-have, or hey, I'm good, I don't want to do business here? What are those non-negotiables that you think a shipper should have right now?
Well, the non-negotiables is to ignore the fact that they have liability exposure. That's not negotiable. So they need to do something to be able to create what I want them to create, and that is a vetting process of brokers. They need to know more about the brokers that they are using that hire carriers that could be the result of a claim. So the real non-negotiable is take heed of the fact that you have liability. You've always had it. But right now, the gap between the motor carrier and the shipper is no longer protected. So as far as what you're asking is, I want to the board of directors, especially. By the way, this is no longer a logistics problem as respects to shippers. This is a different problem. It's a governance problem. That's why I mentioned early on the governance of the way boards of directors manage companies, the way the CFO keeps track of liability. They need to make sure that they are protected as best as they can by having a protocol in place that is defensive, that is forensic, so that when they do get dragged into a claim, they can be in a position of saying, not us, we did our job, and let the jury decide whether that's reasonable or not.
So I think a lot of shippers have recently taken a little bit of comfort in the Texas Supreme Court ruling in that case with Home Depot and Werner, where they found that shippers can't be responsible for ongoing and continuously vetting carriers hauling their freight. So what is your response to that?
You know, that case was so stressful to a lot of people for a lot of reasons. Keep in mind, the driver of the truck was hit by a vehicle that crossed the center line. The original argument, I think, was that the driver should not have been there because he was off route. At the end of the day, I'm not really sure what the result was at the Supreme Court in the state of Texas ultimately changed the decision. But there are so many instances. I've had a recent case where a car ran into the back of a stopped tractor trailer, and the driver was held responsible. It's still under review, but there are just so many instances of vehicle accidents where the conclusions of the court, of the jury, is beyond understanding at some points.
Again, Norris Beren, we really
One other
appreciate
point I
you.
want to make.
No, go ahead, please, sir.
One other point I want to make sure that we understand the nuclear verdicts. If the shipper protects the experience, part of the nuclear verdict may become insignificant because you follow the money and the shipper, well, then all you have left is the motor carrier.
Absolutely. Risk Reward Consulting, again, the founder of it, Mr. Norris Beren. Norris, thank you so much for your insight when it's come to this Montgomery ruling and the position and posture that a lot of folks in the industry should have right now. Really appreciate you for being here today on FreightWaves Today. All right. Well, I thought that was an outstanding conversation. Obviously, some audio issues, but the messaging behind what we heard to me is that, yes, this has been broker, carrier. However, from a shipper perspective, not a lot of people having that conversation, Julie. And that's what I think Norris was really, really trying to get at.
Yeah, I absolutely agree. And yes, I hated that we're having some audio issues because I think there was some really great content in there, and we can probably do some sort of follow-up write-up. But I think, yes, I think understanding how this works for shippers, how they can be properly prepared and protected in these cases is absolutely imperative. And then, you know, we've talked about it before, and I'll continue to say it, like the idea of the settlement value and the cost outside of maybe a court and getting in front of a jury and is a real risk as well.
Yeah,
so I
absolutely.
think absolutely having the appropriate documentation and vetting is important.
We are seeing this case change things before our very eyes.
Yep.
Each and every single day. And we appreciate being able to talk with you all each and every single day when it comes to the latest developments in our crazy world of supply chain, freight, and logistics. And with that, we have much more on the way. I believe somebody from Odyssey Logistics is going to be here in a moment. I got a buddy that I'm going to talk about that's at Odyssey Logistics. He has no idea, but we will make it happen. And we're going to make a commercial break happen right now. We'll be right back with much more on the way here on FreightWaves Today.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. These people operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook. Become part of the 1%. Sign up for FreightWaves Playbook today.
Ladies and gentlemen, welcome back to FreightWaves Today. It has been a jam-packed hour with some great conversations, and we're going to continue that trend and theme because shippers who bet everything on one mode have it paid, of course. The ones holding up best built flexibility before they needed it. Odyssey Logistics moves freight across more than 130 countries, trucking, intermodal, marine, chemical warehousing under one roof. And now Hans Stig-Moller is the CEO of Odyssey Logistics. And Hans is officially now here on FreightWaves Today. Hans, welcome to the show. So happy to have you. How are you doing?
Good afternoon. Thank you for having me on.
Thank you so much for being here. Now, go ahead.
I understand that you used to work with one of my colleagues.
That's what I was going to bring up. I was like, there's a guy at Odyssey Logistics that we need to talk about before we get into the interview. And I'm glad that you did the honors because there's Mr. Mike Beckwith. Are you keeping him out of trouble? Is that a yes or a no?
We are. He's doing a phenomenal job. Very, very pleased. And he's leading our truck brokerage unit.
That's fantastic. It's fantastic. Yeah, you can tell by the people that you had in your organization. We've had Mike on What the Truck, and he's phenomenal. Spoke very, very highly of you. So I'm excited to put a voice and a face finally with a name. So thank you so much for being here.
Malcolm, as you and Julie both know, it's all about the team.
All about the team indeed, Julie.
Well, Hans, again, thank you for being here. So we talk a lot about supply chain resilience. Everyone's talking about supply chain resilience. Tell us why a multimodal strategy is an important part of that.
I think we all know the last 4 years, the freight recession that we've been through, and it's been challenging. There's been plenty of truckload capacity during this entire time, but the market's changed. When we look at the first into the second quarter, it is becoming tighter, and resilience to me really means having options. What are options besides truckload? That's intermodal, that's truckload brokerage relationship established. But on top of that, I think what's equally important is you want to make sure you have equipment allocated. That equipment is going to be available to you. It's great to have cheap rates, but if it doesn't get power or doesn't get equipment allocations, then it doesn't matter. And further to that, I think there's something people don't necessarily think about, and that is, besides truckload and rail modes, are people taking use of partial truckload modes or LTL to the extent that they should or could? Or is everything just moving in a truckload? Are you moving 4 or 5 pallets in a truckload where there's efficiencies to be made by different modes?
Now, Hans, whenever there's, let's say, a breakdown within a specific mode to the ones that you just mentioned, what does a multimodal network actually provide a shipper in real time?
But I think you want to have options, especially today. I was just out seeing customers last week in Chicago, and I discussed it with several of the clients I met with. And that is, you don't want to have all your eggs in one basket in truckload. As the market tightens, you don't know what's going to happen, but intermodal is a great option that we've seen some traction, especially here in the last quarter, that more and more are starting to look at it. But my concern is, my advice to our customers at least, is that you don't want to wait and make that shift until you desperately need it. You want to have it set it up. You want to try it. You want to work through the whatever challenges they are. So that's done before you truly need this. And in having diversity and diverse products that you could choose from, you're a lot better off than you are just using truckload. And I think more BCOs and more shippers really need to look at this option and not box them into one area where they don't have this. And when they choose to explore it, the rates are going to be a lot steeper. Capacity could be at a premium. They have to start developing the relationships at that time. You want to establish those relationships now and not when the crunch comes.
Absolutely.
So obviously, having multimodal offerings allows a lot of flexibility for your customers and allows you all to, I would guess, be very consultative in the modes they should be using. What's the hardest sell for you? Is it hard to get people to look at shifting to maybe intermodal or rail versus over the road, and how do you address that?
Well, everybody likes the truck, and everybody likes assets, and assets are great. But again, you want to have options, and the asset providers aren't able to handle all the freight. Hence the reason of the brokerage community where you have other options. The key is to align yourself with the right brokers that have the right vetting practices for carrier compliance, and also the right carrier relationships in order to ensure that freight can be moved like it should. But I think on the intermodal side, it's a bit of an education to make sure that you bring customers along and make them understand what the value proposition of intermodal really is. At the end of the day, we all know rail is about 20% slower on average when you're looking especially over 500 miles. But if you're moving 50 shipments at once, does all these shipments need to arrive on the same day? Or could 20 of them arrive 2 days later, and actually you would feed into your supply chain instead of having them all arrive and sit there and you can't unload them anyway? So I think it's an education, Julie, that we need to continue to work with our customers to make sure that they are looking at this objectively and looking at what are the options, what should we consider, how do we optimize, and the other thing I think a lot of people don't think about is the sustainability angle of rail versus truck. And at Odyssey, we use Cloverleaf, which is a environmental measurement where we are able to share the CO2 savings from using rail versus truck.
Now, Hans, there's been quite a bit of focus when it comes to rail, of course, and please correct me if I'm wrong, but there was a shift to another headquarters, I want to say, for rail specifically. And then there was a global addition with a headquarters based out of Charlotte. Is that correct? And if so, could you get into that for me for a second?
Are you referring to Odyssey's relocation?
Absolutely.
Yeah. So we were a spinoff over 25 years ago out of Union Carbide, hence a strong chemical connection. And when I joined a little over 3 years ago, I lived in Charlotte, but we had a headquarters in Danbury, Connecticut. I was up there on a monthly basis for about a week. So where I lived really didn't necessarily matter. In making changes at the C-suite, I offered you could live in Danbury or you could live in Charlotte, and everybody wanted to live in Charlotte. So it was really a gradual shift down toward the Charlotte area. Further to that, we start posting positions in both places, and 8 out of 10 we actually found in Charlotte. We still have a presence in Danbury. There's still a core group that sits in Danbury, which we plan to retain up there. But the headquarters has since moved last February from Danbury to Charlotte, North Carolina.
Right.
So I read that you guys have built a data lake and that you have a data science team. You know, I love talking about data. It's my favorite topic. So what does that deliver for your customers?
I think it's one thing I learned a lot about as we've gone through a transformation over the last 3 years, how important technology is, especially on managing freight networks. Without it, you don't have anything. And I think what I see is that most shippers have very limited visibility in their freight network, surprisingly so. The challenge isn't the lack of data, but it's turning that data into decisions fast enough. Shippers really need to integrate their technology across all modes so they see what it is they're doing, hence the benefit of the data lake. And I'll add to it that what I strongly recommend that when shippers look at choosing their logistics partner, they're really choosing their technology future. And they should partner with somebody who is aggressively investing in technology to ensure that they have the latest technology to help support their needs. Technology is moving at rocket speed. There's a lot of buzzword. People are talking about AI. We are getting smarter about AI, I'd say on a quarterly basis. It is a very high focus area. We've actually just started an AI academy within Odyssey. And what we've done, a little bit different, many of our colleagues were concerned about what is AI going to do to their job and what does the future look like? And we've actually opened up and said we're going to use Claude and also the Microsoft equivalent to let them explore and try AI and how it can affect their job and help them be more efficient, effective, better at their job, how their jobs are going to transform from what they're doing to today. Out of our 2,000 colleagues, we had 116 sign up for this AI Academy. And it has been a tremendous success in regards to what they're doing, what they're finding out, how they can be more productive in what they do today.
I think that's so smart.
I think so as well. If only there was an event on July 15th in Chicago at the old post office to talk about AI in detail put on by FreightWaves. I would go to that.
I bet it's gonna be
That's
great.
just me. I maybe have some tickets on FreightWaves.com. That's a shameless plug. Anyway, Hans, I want to talk about this because diversification is key for any type of organization for success. I think that is a separator between good, great, and elite. And I want to talk through this because chemicals, automotive, and consumer goods, they're very different supply chains. My question is, how do you all serve them so well given how different they are?
So, a lot of people have asked me, Odyssey, as you might be aware, is a roll-up of 17 companies. And many people say, how do you integrate? I think you have to be careful and make sure you understand the question you're asking. In terms of integration, what we've integrated is the financials. We're using Oracle as our ERP, but each one of the businesses are quite distinct. And as a result, we really have operating systems in each one of the businesses. Most of them are homegrown systems, but you really want to have the right systems in the right place. We looked initially at some systems that would encompass multiple businesses, and we really found that it doesn't exist, and it doesn't give you the efficiency that you're looking for. So we really have focused on, like, our managed services. We have a TMS running that. Our intermodal business, we have an operating system running that. Our Jones Act business is a separate operating system. So we really focus on how do you have the right system, the best system operating each one of the divisions and the businesses, versus trying to put everything into a square hole and think that's going to work effectively.
So Hans, I always want to ask, I'd love to get your take on the freight market. What do you think it's going to look like in the next 6 to 12 months? And ideally, if we can, let's break it down by mode.
I think the next 6 to 12 months are going to be exciting. The recent regulatory enforcements that we've all seen will continue to put greater pressure on capacity. We have in the last 3 to 4 months seen rates go up across the board. We're finally seeing tightening in the market. We're not necessarily in the last 3 to 4 months seeing volume increases, but capacity has definitely been reduced, hence forcing these pressures. But I think the demand signals are pointing toward further tightening moving forward. There's a lot of small carriers that have exited the market, and they're not going to return that quickly. I just caught on the prior show when you talked about the recent Supreme Court ruling. I think insurance rates are going to continue to go up, making it even more difficult for the smaller carriers to compete and be in this market. I think the inflection point will come in the second half of 26, and the shippers who have already tested and are using intermodal will be much better positioned to better access and better rates than the ones who think they're going to continue to do truckload, and that's going to be their end all. The other data point that I looked at recently, which I found interesting, was the CVSA 2026 road check. If you notice the numbers, that week led to a record service violations, more than we've seen in many, many years. So you're definitely seeing some dynamics that we haven't seen in the past. And all indications are the market will continue to tighten. But one thing we have to keep in mind is how many of our friends and family are eager to get out and become a truck driver. It is a tough job. I have a lot of respect for the men and women out there who drive trucks every day. And we got to make sure that they're compensated appropriately, so we make it a fair and a good living for them, so they can continue to move product around the United States that we all need. Let's not forget the percentage of cargo that's moved by truck every day around the country.
Hans, I couldn't agree more with that statement. And it's important that folks that are in seats like yours get that concept, because it shows within the quality of service and the relationships that you have with carriers. So that kudos to you and the entire team at Odyssey for thinking that way. I guess my follow-up question to that, at what point does multimodal stop being optional and start, I guess, being necessary to compete at the highest level? What does that look like?
I think we're there. I think any shipper who is not focused on multimodal today are going to leave themselves behind and are going to put themselves in a bad position. All people have to remember is what happened during COVID and the chaotic nature of that very unfortunate time for all of us. But the ones who were well prepared, who had multimodal options, were in a much better position than the ones that were not. So We don't have to go too far back in history to remember what chaos truly looks like and the importance of diversification in terms of how you move freight out there. So I don't know if anybody would think differently. The other thing I think what's important is that people don't forget is that it's important to be a shipper of choice. You know, in my past, I used to run a drayage company of 3,300 owner operators, and we had drivers that didn't want to go to certain facilities, certain customers, because they were not driver friendly. So I would strongly recommend that shippers keep in mind, are they driver friendly? Are they treating the drivers correctly? Do they have appropriate facilities? Are they getting them in and out on a timely basis? Because let's not forget, whether you do truckload or you do intermodal still needs a truck on both ends. You're still trucking. That box is still getting in and out of yards, whether it's coming in or going out via truck, via driver. So we still need the drivers, even though obviously it's a much shorter haul. But definitely something that we need a greater focus area for the industry.
Now, Hans, I want you to get a paintbrush ready for me because I want you to paint a picture for me. And this picture is going to be in 2030, all right? So let's say 4 years down the road. What does the ideal supply chain look like? What does that photo look like?
2030, that's a long ways out there. I think what we're going to see is we're seeing what AI is doing to our business here short term, and how that's going to evolve. I think there's going to be things that are being developed in the next, I wouldn't even go 2030, I'd go 18 to 24 months. That's going to drastically change how we all operate. And as I've shared with my team, we can fight it or we can embrace it. I think we all know what the right answer is. That is embracing it, trying to continue to be nimble, finding out how do we get better? How do we ensure that we provide even better service, better solutions to our customers, greater stickiness, truly partner with our customers. There's a lot of definitions out there of what a partnership is. You know, to me, a partnership is a two-way. Our role is really to make sure that we give our customers the best possible service that we can at a very competitive price. But service has to trump everything, but we got to make sure we're competitive. But for me to try to predict 2030 is a difficult one. I think we're going to continue to see global trade and domestic volumes increase. So I definitely am very positive in regards to volumes are going one direction, and that is up, especially domestic volumes based on what we're seeing going on these days.
I think that's an amazing picture and was a hard question.
It was a hard question. You answered it flawlessly, by the way.
All right, so I want to end with this question. So a shipper says, I already have a broker, I already have a 3PL. What's your answer to that? Why Odyssey?
I think it's important to explore what value propositions are out there, and I think I've been at this a long time. I don't know it all. None of us know it all. We all learn. So I think it's important to always be curious, always to be listening, looking at what are the other options out there. You know, Odyssey is unique because we can provide end-to-end solutions for our customers. We have invested over the last 3 years, $27 million in technology. Technology is a very, very high focus area for us, especially moving forward. Speaking of that, our CIO has just put together an article that we posted on a website that talks about technology, how we see multimodal networks evolving. And I'd encourage anybody who's watching this to either see it. I believe it's also posted on LinkedIn, but on our website under all blogs. But really being able to be a solution-oriented provider, forward-thinking. We are big on QBRs, quarterly business reviews with our customers, and really looking at continuous improvement. How do you continue to get better? How do you continue to sharpen your pencil?
Hans Stigmoller, again, CEO of Odyssey Logistics. Hans, thank you so much for being here. This was an amazing conversation. If it was up to me, I think we'd be talking another 2.5 hours. That's how fascinating this stuff is. So thank you so much for being here.
Thank you.
Appreciate you including me. Thank you very much.
Yes, of course, of course. Again, that was a phenomenal interview. I've really enjoyed it. There's been a lot of great conversations. And Julie, the funny part is, we still have much more on the way. So we're going to cut to a quick break real quick, and we're going to have much more conversations only here on FreightWaves Today.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
What's the masterclass all about? Well, here's what I'm going to tell you. If you're a driver, you're an owner-operator, you're a fleet owner, whether you're in compliance services, dispatcher, no matter what it is, masterclass is for you. Every 2 weeks, you're going to sit down with me and we're going to go over certain business topics that are related specifically to your small trucking company operations. We're going to help you with everything from compliance to how to negotiate better on the spot board, how to find direct freight, and everything in between. This is the reason why you don't want to miss out on Masterclass. It's about an hour to an hour and a half, and then on top of that, you'll have the library to you so that way you can always research and reflect back onto it. Don't miss out this opportunity. This is built specifically for you. I'm excited and I hope to see you in class.
Imagine a world where your freight moves as fast as a digital pulse. What if your visibility didn't just tell you where a truck was, but exactly where it needed to be 48 hours from now? Think of a logistics network that corrects its own mistakes before they cost you a single dime. What if your supply chain could think for itself? Imagine AI agents negotiating rates in milliseconds, predictive models that solve labor shortages before they even happen. This isn't science fiction, it's the agenda. On July 15th at the historic Old Post Office in Chicago, FreightWaves presents the Supply Chain AI Symposium. We are defining in real time how AI is embedded into every mile, every warehouse, and every handshake. Because in 2026, the future isn't just coming, it's already negotiating. The FreightWaves Supply Chain AI Symposium. Secure your spot now.
The CEO of Myborg Companies. Yeah, Myborg Companies, right? Yes. So excited to have Zach here. Tell us a little bit about yourself. I want the viewers to hear about your history, the legacy of truck driving in your family, and why you're getting into regulation and legislation a little bit.
Well, thank you very much for having me, Malcolm and Julie. My name is Zach Myborg. I'm the owner and CEO of the Myborg Companies. Very proud third-generation driver, with my son being a fourth-generation driver. He was part of the SDAP program. That was a great program that our FMCSA put on. Here today to talk about the fix for all trucking. We have a lot of buzz going on in our industry, particularly about new rules coming out. We had the Ghost Truck Act introduced by Florida legislator. We've got the Delilah's Law. We've got the SCOTUS ruling. These are all great, but they address symptoms of our problem. And the real problem in trucking is we're regulated by hours of service that are 91 years outdated. Yeah, you heard me right. The hours of service rule initially came out in the 1935 Transportation Act,
Right.
which is kind of wild to think. Trucking was wildly different in 1935.
100%.
I mean, we didn't have CBs, you didn't have radios, you didn't have power steering or air conditioning, right?
ELDs.
ELDs, exactly. The ELDs are not the problem. The real problem in trucking all boils down to our 60, 70-hour rule in trucking. So if you take that 70-hour rule and you divide it out by 8 days, you limit a truck's productivity to 8.75 hours of productivity per day. Now, we were talking a little bit offline, but what other industry is regulated that you can only work 8.75 hours, then you must drop the pen and walk away from the desk? It doesn't happen, right? And so trucking is unreasonable with that. Now, within a 24-hour period, we're already allowed to work 14 hours in a day and then a mandatory 10 off. And so my good friend, Dale Prax from Freight Validate, and I have submitted a notice of rulemaking to the FMCSA, Department of Transportation, and it's in policy review right now, but we're really campaigning hard to update a 91-year-old regulation and just simplify our hours of service. This fixes all problems with trucking. Give us 14 hours on duty, that would include driving or anything truck related, and then a mandatory 10 consecutive off.
Wow.
This increases the productivity of a truck, thereby reducing the cost to operate that truck. A lot of us are scratching our heads at why these foreign-owned and operated competitors in our industry are able to just beat the pants off of us compliant trucking companies, legacy companies that have been around for 40, 50, 60 years in America. And the reality is, it's because there's a massive incentive to break the rules, and there's no compliance enforcement for overseas. But we don't fix that by policing the world. What we do is we stop and we think, is the regulation reasonable? And I'll argue till we're blue in the face that 8.75 hours is not reasonable for a licensed professional to operate a commercial motor vehicle. Give them 14 hours on and then 10 off. Trust that licensed professional, who's not incentivized, of course, to crash the truck or cheat the rules, to do his job and then park it safely and take a 10-hour break.
So is the main change then to break it down simple for people who don't?
Yeah.
Hours of service seems simple, but it's really
it's complicated. It is not simple.
So is it really just removing the 36-hour reset?
See, that's how complicated it is, right? It's a 34-hour reset.
See, I was like, just 2 hours reset.
No, because today we're regulated by this. Within a 14-hour period, within 24 hours, you're allowed 11 hours to drive that truck. Now, within 11 hours, you have to stop and take a 30-minute break between 3 and 8 hours. There's a 16-hour exemption.
Never only 30 minutes. We talked about that.
Yes, exactly. It's never 30 minutes because you got to pull off, you got to stop. And usually you try to time it with your fueling, which is technically illegal, but everyone does it. But the reality is you're going to get behind a guy who's taking a shower in the fuel island, and now you've got your 30-minute break stretched out to an hour break. But everyone's rushing to beat that 8.75-hour clock, which doesn't make any sense. Within a 24-hour period, we're already allowed to work 14 hours.
Yeah.
And I say this with conviction. I'm a third-generation truck driver. Easiest part of the job and the most rewarding part of the job is holding that steering wheel going down the road. Let the licensed professional decide what he wants to do during that 14 hours. Get rid of the 70-hour rule, get rid of the 60-hour rule, get rid of the 30-minute break, get rid of the 16-hour exemption. And we already have sectors of our industry that have done this for years, dozens of years. In fact, oil and gas, totally hours of service exempt. Agriculture, totally hours of service exempt. Now we have this new fertilizer exemption. If you're hauling anything to do with fertilizer, you get 16 hours to drive a truck. It's time we stop and we think about this. Does a 91-year-old regulation from 1935 make sense to regulate an industry in 2026? Dale Prax and I absolutely think no. And what we're seeing today is the byproduct or the symptoms of this outdated regulation manifesting problems all over our industry, right? We had the SCOTUS ruling, which is great, but it's a step forward to bringing shippers and brokers into some sort of compliance instead of this willful ignorance, right? That's gonna take 5 or 10 years to permeate through our industry. What we need is a fix now, and that fix comes with a 1410. Some of the things that it fixes, it increases driver pay.
Okay.
Productivity directly correlates to wages. This is an economic law. Happy to take callers on this or any hate mail you want to send my way, but productivity directly correlates to wages. And so
100%.
The more you work, the more you're gonna make, whether you're hourly or mileage or percentage. It's just simple. So we're going to go from a limitation of 70 hours by 8 days, or 8.75 hours of productivity, to 14 a day. Driver wages are going to go up. The next biggest thing, and this is a real big thing, is parking. This is going to decrease the need of every truck to park by 5.25 hours, or up to 5.25 hours per day. Now, we're all proud of DOT because they just appropriated $200 million for parking, right?
Yes, they did.
And so the average parking spot for a tractor trailer costs $30,000 a year. That's just shy of 7,000 parking spaces. Good job. However, if we change the hours of service rule from a limited 8.75 hours of productivity today to a 14 on, that would be the equivalent of adding 40,000 parking spots, or $12 billion of parking appropriations. And all because we're just updating a regulation. This allows drivers to get to their shippers and receivers, to park there overnight. This allows drivers to get home when they're only an hour away from home, right? And they can get good rest in their bed instead of out on the road where dispatch is stringing them out. This also brings pride back to our industry, right? The compliant truck driver can now compete against the non-compliant cheaters that are out there. 100%. And we know they exist. There's a reason there's 1,000 different ELD providers on the market today. And yes, FMCSA is doing a great job because they've eliminated 50 non-compliant ELDs since the beginning of the year. But we still have hundreds of fraudulent ELDs that allow for people to erase their hours of service nightly to get booted out of the market. And the self-certification is a problem, but I don't know how DOT is going to fix that, because by virtue of computer code, you can always update and change computer code. So what you do is you make the regulation more reasonable, and that is a 14 on, 10 off. Stroke of a pen fixes it.
Okay, so I want to talk about, you just brought it up, ELDs being revoked or compliant.
Yeah.
So walk us through the process of what that looks like. And when an ELD is revoked, what then happens, and is that process fair currently?
Yeah. So Rockford, Illinois is outside of Chicago. Proud to say Rockford's a great town. Chicago has brought a lot of fraud into our industry. That doesn't mean every company from Chicago is fraudulent,
Of course.
but we all know this. I have plenty of friends that are in the consulting sector of our industry, and they've been at these companies when their ELDs were revoked. And when their ELDs get revoked, the same chameleon carrier concept now exists in the ELD world. So, and you can see this. If you go on FMCSA's website and you look up approved ELD providers, you'll see there's companies with 4 or 5 approved ELDs listed, and they're all registered to the same address. Countryside, Illinois, Austin, Texas, you name it. Pick up the phone, you call them, and they're definitely from overseas. You call them and you ask them, and they're from overseas. They'll tell you that straight up. What happens is when you're driving along as a truck driver and your dispatch is telling you to get there, and you know you're running a non-compliant ELD, and that ELD is caught, FMCSA comes in and shuts that E-log down. They give the carrier 60 days notice to switch to a new ELD provider. And then they tell the carrier, if you can't find a new ELD, it's okay. We'll let you run paper. Guys, this is wrong. This does not incentivize compliance, and it definitely disincentivizes profitable compliance. If we want a fair marketplace, and fair means equal treatment, not equal outcome, right? If we want a fair marketplace, when that E-log provider is found to be fraudulent or manipulating hours of service, tampering with drivers' hours, shut it down right then, put a cease and desist order or a shutdown order to that company, that carrier that's using it. Don't give them 60 days to choose a new vendor. But I do got to say this, they're pretty smart, right? It only takes them about an hour to download their entire client list and re-upload one of their chameleon ELD schemes to that tablet, and that truck is back up and operating within an hour. So DOT has a muddy uphill battle ahead of them on the ELD fraud. We can fix that by taking the wind out of the sails of the fraudulent companies by incentivizing profitable compliance. And we do that simply by changing the hour of service to a 14 on, 10 off only. Get rid of all the other rules. Another thing it does, Julie, is it drives down our cost, right? So we have substantial overhead costs and fixed costs in trucking. So the more miles you drive, the more hours you drive, the more you can dilute that overhead cost. Now, I've done the math on this. And my math is not perfect. I'm not an accountant, but when we're all buying the same stuff, we're buying the same fuel, we're buying the same tires, we're really competing for the same drivers, and we're buying the same trucks and trailers, right? The only thing that changes is your denominator, how many miles or how many hours you're dividing it by.
Utilization. Yep.
And you could go on Facebook Marketplace where they're advertising to hire drivers and see there's ads out there. Solo driver hiring at 4,500 miles a week. You know that driver is not doing that compliantly. You cannot run 4,500 miles a week compliantly.
There's no way.
Back to back to back. In fact, you could do 2,500, at most 3,000. Maybe, if you're westbound Interstate 80 at 75 miles an hour, maybe you're cranking 3,300 a week. But the reality is, these guys are driving their cost down to about $1.70 a mile, and shippers are absolutely exploiting this by utilizing brokers who are willfully ignorant, who are then putting it out to the marketplace and selling the load on that. And this SCOTUS ruling is changing that. But again, this is a big ship and it's gonna take a long time to turn around. It's gonna be 5 or 10 years before we see the results. So you fix it today by either the administrator or the FMCSA strongly considering our notice of proposed rulemaking of the 1410 that Dale and I have submitted, or we have the President of the United States can enact an executive order to override this. What we really would like to see, though, is it codified in law through an act of Congress. Now, there's a whole bunch of legislation out there and some really good legislation, right? We've got Delilah's Law that's cleaning up the foreign dispatch problem. We've got the Safer in Transportation Act, again, addressing the foreign dispatch problem. We've got the Ghost Truck Act, again, all good things.
About that, I don't know exactly
It was
what that is.
just introduced last Thursday by the Florida Congressman Greg Stobie, I believe. That's how you say it, and Representative Dave Taylor out of Ohio. And what it does is it really tries to address but it has some terminology that needs adjustment in it. It addresses foreign tampering with ELDs. Look, if we're gonna have a law, we all need to hold to the law.
For sure.
And so there shouldn't be any tampering of ELDs, but it also addresses the foreign dispatch issue.
Okay.
I think with appropriate industry influence, we can articulate what we actually mean to fix. And what we mean to fix is equal treatment across the board.
Right.
But we have to have a profitable compliance. You can't have a driver that should be making $100,000 a year, a $200,000 truck, a $50,000 to $100,000 trailer, and what should be an insurance policy that covers the motoring public and only get 8.75 hours of productivity out of them in a day. Let the professional, the licensed professional, do his job.
Two things. Number one, I thought Dale Prax was the best storyteller I've heard.
He's good, yeah.
I think you might be better.
I'll tell
And
you.
I don't want to tell Dale that, but I'm sitting here just
He'll hear it now.
I'm like, holy cow. My question for you is, you've done something, in your meetings with Dale in Washington that is rare. You've gotten support not only from Democrats, but Republicans as well.
Yeah.
How were you able to get this coalition together and do this?
Well, this is very much a bipartisan issue.
Of course.
This isn't an us versus them. It's not a red versus blue. It's not even a domestic versus foreign issue. It's a right and wrong issue. And the reality is when we have someone that makes a terrible mistake and pulls a U-turn on a Florida Turnpike and people die, right? And it becomes a very public story.
100%.
You have to stand back and ask, like, what's the real problem here? Is the problem that the guy doesn't speak English? Well, yeah, I mean, that's maybe a component of it. It's a problem that maybe he doesn't have a appropriate license. That might be a problem. But really what the issue is there's a system in place. And there's a system in place today that is modern day indentured servitude. And what that means is modern day slavery. And what it is foreign owned and operated entities that aren't held to the same standard as compliant domestic entities because they're outside the reach of our governing bodies in America, right? They're operating the surface transportation here in America. And they're doing that by bringing over migrant labor, which is not a bad thing if done appropriately, but we have standards. 100%. And you have to meet those standards. And if you don't meet those standards, then we need to fix the system that's allowing this exploitation. The SCOTUS ruling was a great step forward. These legislative attempts are a great step forward. But again, the real problem comes back to, can you be productive and compliant? And you can't do it in 8.75 hours a day when you have your competitor out there running 16, 18 hours a day, racing his e-log nightly. There are 1,000 different approved e-logs. It's estimated that there are 700 to 800 of those that allow for tampering. I mean, you can see the videos all over the internet of this. This is a major problem. And this math is corroborated. David Carell actually briefed the Biden administration back in 2021, back when the push was going on that we have a shortage of drivers. And I want to be clear, a shortage cannot exist in an economy unless there's government intervention limiting a market to work. We don't have a shortage issue. And that's what David Carell suggested. We have a utilization issue.
Yes.
He suggested that only 18 minutes more on that driver's clock allows, or would be the equivalent of adding 80,000 trucks to the marketplace. 18 minutes, 80,000 trucks. Like, so the math is there. But today it's estimated that there are 1 million trucks on the road using e-logs that allow for tampering.
Yeah.
1 million. 1 million guys, like, that's huge. When you're the other 3 million that are limited to 8.75 hours, and you're competing against guys that are running 14, 16, 18 hours a day, that is just an unfair advantage that you cannot overtake. And so we must bring the rules back to the game. Let's equal the playing field, and we do that by updating the legislation.
I mean, I think everyone can agree that we should all be playing by the same set of rules, right?
Equal treatment.
Absolutely.
Yeah.
All right, so I'm going to back up a little bit because
do it.
you are so passionate about this, and I
Yeah.
love hearing you talk about it. So how does a truck driver, then CEO of a 225 truck fleet,
We're a little larger than
get
that, but yeah.
Okay.
And
Well,
we've got other.
to a
Yep.
a relatively large fleet,
Mhm.
large end of a midsize, end up getting involved in this, proposing this legislation, deciding that you were going to be the one to do something to make a change to happen and get those wheels in motion?
Over the last 3 years, I've watched our freight disappear to brokers and scratch my head at how could this happen, right? How is it less expensive for a shipper to give the freight that we were hauling to a intermediary who then is giving it to a fleet with my same costs? And we watched that happen with multiple shippers, and what we realized was they're not playing by the same set of rules. I mean, it was as simple as showing up to those same shippers and watching the trucks being loaded out of those facilities. And you could see that these are handwritten names on the side of the truck, and the driver gets out and clearly has no business being in a truck. And then you go in and you talk to the people on the dock that you know because you've crafted relationships with for 5 and 10 years. And the people on the dock are complaining like, yeah, he doesn't speak a lick of English. And he's gonna be in Nevada tomorrow for delivery. That's a long way to go from Illinois. And it's a solo driver. So like, you know this exists. The other part is my consultant friends that run around to different businesses and essentially show the different markets how to exploit these rules.
Yeah.
So, and that has to stop. It absolutely has to stop. The game is up. The 60 Minutes article obviously
Rob
opened
Carpenter, yeah.
up a can, right? And Rob has done some great work on this stuff.
Absolutely.
So is Danielle Chaffin. Yeah. But we've got to continue to push the envelope and expose this fraud, because at the end of the day, you get what you pay for. And the crash that happened down in Florida absolutely had multiple victims. And I would even argue that driver, that truck, was one of the victims because he had no idea what he was doing.
No.
And that's not fair. When we stopped this guy back in New Mexico months prior and then let him go for an out-of-service order for not speaking English, he didn't learn to speak English in 3 months. The problem comes is that we just willfully looked the other way because it was convenient and people died. Now, there are some good things happening, and I have no dog in this fight, but GenLogs is doing some spectacular things. GenLogs is a system of thousands of cameras set up all across U.S. interstates and highways, and enforcement officers can look in real time and use AI to see that these trucks have done thousands of miles a day, and it's only a solo driver, and then compare that against the e-log. But the problem with that comes is that they're only giving them an out-of-service order. Okay, they're gonna take him down the road, the guy's gonna stop for 10 hours, in 10 hours, he's right back on his way. So we need actual enforcement of shutting these companies down. Just some good old school police work.
Okay, so walk us through the process. When will there be a formal bill introduced? What do you think the time frame of that is? And if people want to show their support, how can they do that?
Yeah, so I've worked with my local legislators, Darren LaHood and Eric Sorensen out of Illinois. But again, I argue this is not a bipartisan thing, right? This is just a right and wrong thing.
Yeah.
If we're gonna have rules, follow the rules. If we're not gonna follow the rules, let's throw the rules out and change the rules to something that we will follow. And Dale and I are crafting legislation to introduce, but at the end of the day, we kind of need all of these introduce legislative bills to come together as one to neutralize the playing field, so we're starting fresh. But this could be done through a policy change at FMCSA by Mr. Derek Bars, who's done great things for our industry. And I hope he continues to. This could be done at the executive level. If President Trump wants to come in and see that we're truly putting America first and the American worker first, and we are a nation of law and order, with a stroke of the pen, he could put an executive order in place and make a 1410 a very realistic thing. Even give us a trial period of 6 months. But at the end of the day, if we codify it into law through Congress, then it fixes the problem permanently and we don't see it come back. And that right there reduces that competitive edge that the non-compliant companies have exploited while the compliant companies have suffered.
I want to talk about the future because your story,
Yeah.
the third generation, you've passed the game, quote unquote, to your son.
Yeah.
First,
he's earning some reins slowly.
He's earning
right?
some reins. How do you see the future? Because I hear the passion, and I'm not mesmerized, but I am, because I'm just like, wow, like this is what this is about, you know, and just having your son and the future for him. Like, what are you hoping these conversations that you're having with Mr. Prax, of course, on Capitol Hill, to leave with him and the next iteration of, an industry that, quite frankly, is in your blood. This is all you know.
Yeah, this is what we do. Well, the last 4 years, I've been plagued with diversifying.
Yeah.
Because like trucking has been so difficult to even break even because of the rampant fraud.
No doubt about it.
Like we've had to diversify drastically. So now we're deep into warehousing and other sectors. What my hope for my son is that he can run a company someday where he can enjoy profitable compliance and predictability, right? He can openly have conversations with legislators and regulators that aren't just policy desk jockeys, but actually understand the industry. And we're starting to see that change. 10, 20 years ago, it was very much us versus them, as far as trucking versus Washington, but it's not that anymore. It's us working together to clean this mess up and move forward. So I'd like to see him carry that legacy forward of a profitable yet compliant company that we can move a lot of freight, warehouse a lot of freight for a lot of people, and enjoy the good culture that we've created in our Rockford and Houston facilities.
That's fantastic stuff. Wow.
Yeah.
Truly.
All right, so if there was one thing to leave our viewers in the audience with, what would it be?
Yeah.
1410, we got that.
1410, absolutely. Pick up the phone and talk about this with your friends.
Yeah.
Right? So like, let's get some industry buzz around this. Some drivers are gonna argue that their legislators don't care, but they're wrong. Like if you pick up the phone and you call your legislative office, they do care. Go visit their office. Let them know that you are a compliant truck driver and you want to follow the rules because you don't want to end up behind bars for breaking the rules, but you can't compete against the guys that aren't. And so what we need to do is update a 91-year-old rule in order to allow you to compete and do your job the way that it needs to be. And then again, there's already 3 major sectors that have total hours of service freedom. Why can't we let the licensed professional do his job professionally? So talk about this. Let's create a buzz. Let's create a stir. Let's fix the problem, the core problem of our industry, not just treat the symptom, and the symptoms will fall off as we correct the problem.
So that's fantastic stuff, man. It seems like common sense isn't necessarily common until you break it down in this way. It's just like, what are we doing? 1935?
Yeah, 1935. I mean, think about that. You didn't have power steering. Guys would wear gloves while driving a truck because they would literally grind their hands on the wheel. I mean, truck drivers were muscular men. Yeah. They had 2 sticks to shift. They didn't have air conditioning. Imagine trying to dispatch a driver today. You worked in brokerage. Imagine trying to sell a truckload to El Paso in July with no air conditioning in 1935.
I would be done.
Like you literally handed a driver a wad of cash, sent him to the coast, and said, call me when you get there. As early as the 1980s.
Yeah.
Like 1935 was a wildly different time. A guy broke down on a 2-lane road. He fixed his truck before he was up and running. So we can fix this. We absolutely can. We need to fix this because this is the core of all of our problems. Let's not just treat the symptom. Let's fix the core of it, and that is a 1410.
of 1410. This has been an amazing, amazing segment. Zach, seriously, thank you for being here. I'm going to ask that you come on What the Truck again next month.
All right, I look forward to it.
We got to get
Maybe we'll
that
talk
one.
actual trucking stuff.
No,
at
no,
that
I
point,
think
right?
so too. No, but this is a great precursor for it. Where can we find more information about what you and the rest of the team at My Board Companies are currently doing as well?
Welcome to reach out to me if you'd like. Facebook, LinkedIn, email is zmyborg@myborginc.com. Dale Prax is quite available as well. His company is Freight Validate. Feel free to talk to us, to stir a buzz about it. But otherwise, like I said, call your local legislator and see what we can get moving as far as codifying it. And we'll continue to move forward. I do ask if you're working for a company and you know that your company is using fraudulent e-logs, report it. And you could report it simply by taking a video of it and publishing it to Facebook the way many people have in the past. And that will really create a stir in our industry of getting the fraud out of trucking, because this divergent
Is there an anonymous
supply
way to
curve.
report it? Is there not a new portal?
I felt that we put out an article the other day about a portal. It may have been for fraud, but I'm pretty sure this can coincide with it as well, that you can upload this anonymously to be able to be like almost a whistleblower per se.
Absolutely.
Yeah.
And there are plenty of people that have done it already
Yeah.
through Facebook or whatnot. Yeah.
Again, Zach Myborg, CEO
Thank you
of
For your
Myborg
take and
Companies.
thoughts on this, yeah, it's been great.
Fantastic interview. This was awesome. We are going to have Mr. John Kingston coming up in the wings right now. He is going to talk all about fuel and a couple of articles that he has dropped over the last few days. But before we get there, let's hear from, of course, our sponsors at Highway. Side. And Highway gives freight brokers the carrier identity tools to verify carriers, secure the load, and book with confidence. The performance guarantee puts up $100,000 behind that promise. Real money behind the standard. No other freight technology company has made that commitment. This is, again, Highway, the standard for carrier identity.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. These people operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook. Become part of the 1%. Sign up for FreightWaves Playbook today.
Malcolm and I were talking a bit in the break about our last guest in the last segment and had some takes on it. And and there's just so much there beyond
Goodness.
just the hours of service, right?
Yeah.
So my initial thought was, we can get flack for this or whatever, but we're going to give our open and honest opinions. And if
100%.
you disagree, comment on social media, use FW Today, give us your feedback. This is how we learn and all get better as an industry, right?
Yeah.
You know, we kept saying, let's leave it to licensed professionals to make the decisions, you know, versus being so heavily regulated on hours of service, give them 14 hours to drive and a 10-hour break. And I do think that drivers who are experienced and who actually want to be entrepreneurial and make a living should be able to manage their clocks, how they see fit, and what works with their body and their sleep schedules and all of those sorts of things, right? To drive utilization. And the playing field absolutely should be level and everyone should be playing by the same set of rules. But something about that phrase, licensed professionals, caught me a little bit, sat with me and made me a little bit uncomfortable, because I do think that there are issues with CDLs being licensed to people who are probably not adequately trained to drive a truck. That is a public safety issue, and 80,000 pounds going down the road. And, you know, when you look at FMCSA violations, I can't remember the stat because I'm terrible at remembering
No, it's
stats.
okay.
There's a huge number of it was one of the top ones, certainly like within the top few of their CDL issues. They're driving, they don't even have a CDL, right?
Yep.
So without that being enforced, how do you continue to let fewer regulations stand, which I'm for, honestly, without regulating who's able to do the job, without ensuring that they're trained properly, without ensuring that they have a proper CDL and that something actually happens if they are caught in violation of having a CDL.
I could not agree with you more. And I mean, this topic is weird because I've been, you know, host of What the Truck, right? Came in a show. Obviously, I've never been behind the wheel of a truck. So the comment section, Julie, has not been friendly to Malcolm Harris, right? It's like, well, what do you know about trucking if you've never been a trucker?
Well, and I'm in the same camp, right?
You know, I'm in the exact camp.
Right along, I have certainly worked with and spoken with drivers. I've talked to planners about how we're managing hours of service, all of that. But no, I've never driven a truck.
Right.
This guy has.
This guy has. I mean, his son has. His father has. His grandfather had, so on and so forth. I can sympathize and empathize with what Zach was saying. Also, if we take it a step further, I mean, this is an epidemic, right? And I truly, if I had it my way, there would be a pause of all CDL issuance, regardless of standing right now. I don't think there should be anybody else within the actual space right now, given how tumultuous times are today. That's just a Malcolm Harris standpoint, because there's not a driver shortage. I mean, Zach's point, Craig has been very bullish on this statement for, 6 months or so. There's not a driver shortage, but I think that the playing field is that, hey, there's opportunity that's being capitalized on non-domiciled drivers that is taking away from the honest living. And people say barriers to entry. We need barriers to entry. Barriers to entry needs to exist, and it's not to keep, again, and I've been very, very vocal about this, it's not to keep people that are underrepresented out of the space. It's
nothing to do with race or
zero.
Immigration.
It has zero to do with that. It's to say, hey, if you can't read a street sign, if you don't understand and have a proper process on how and what to do in certain scenarios on American roads, you should not be able to be behind the wheel, and that's not a bad statement. It's not a bad statement at all, I don't think.
I don't think it's a bad statement to say that everyone has to play by the same rules.
I can't go get a driver's license. I can't go get a boating license right now without taking an exam.
Right.
I can't go get a driver's license if I don't have certain things, even for renewal. Right? Like that to me is, I don't know. I could talk about this all day.
I think the biggest point, and then I want to get to John, because we
Yeah,
got to talk about
of
oil.
course.
But I think the biggest point here that you made that I love is that when other people are allowed entry into an industry or into a job or into whatever, and they don't play by the rules, it makes it nearly impossible for those who are the licensed professionals doing it honestly, working hard to make a living, to be able to stay in business.
For
right?
sure.
And that's what we want to get at. How do we promote those that are doing the right thing and allow them to be profitable doing the right thing while mitigating the damage that the bad actors are doing, right?
Could not agree more. So we'll definitely get into that more, and we're going to get into oil right now because
John,
the market.
Thanks for sitting through our rant and taking a minute for us to get to you. We appreciate it.
John, what's up, sir? How are you?
Well, really, the question is what's down. Okay, the price of gas, the price of oil is down, and the Department of Energy Information Administration average weekly retail diesel price, which is the basis for most fuel surcharges, dropped below $5 a gallon for the first time since in a long time. 483.2. The futures market is about the lowest it's been. I think it's probably going to settle out today at the second lowest it's been since the war started. So I'm kind of amazed at this. I will tell you that I think that it seems the trading community is just completely accepting that everything's going to be normal, everything's going to be fine. We've got an agreement that would open up the Strait of Hormuz. We haven't really even confirmed that the strait is fully open or what the status is. There has been a fair amount of oil that's been oil and other things that have moved through it the past couple of days. But I guess I'm just kind of stunned at the total acceptance that everything's going to be a-okay. And we know that the market has lost, roughly I think the Bank of America estimated at more than 1 billion barrels of supply since March. I do not think that there's been enough demand destruction to offset that. The reason that we haven't really had a total crisis is because of a massive inventory draw. Those inventories need to be restocked. So I guess I'm just sort of surprised at how complacent and calm everybody seems to be. I might be completely wrong, but I think when you do the math and you add up the lost barrels and you lost that, and you know why we haven't had a calamity, because we've been drawing so hard on inventories. That inventory needs to be restocked. And so somebody's wrong here. It might be me. I don't trade it for a living, so.
I mean, how much time do you think we have left in that inventory? You've talked about tank levels in the past and drawdown of that inventory level. What do you think the timing is?
Well, the timing has always been put by several people, probably like the next 4 to 6 weeks, that if we're going to have a crisis because we're at tank bottoms, as the term is, you haven't really heard that term tank bottoms in a while, but you've heard it widely since in recent weeks, that if you're going to have a tank bottoms crisis, it's going to happen soon.
Now, John, I want to ask, when it comes to, I guess there's 3 scenarios, right? So you have Iran, you have Russia, you have the Gulf, amongst other things. What has your eye the most right now, John?
The eye is about how much oil is going to get through there. And also, I'm going to be looking for, let's assume that for a moment the Strait of Hormuz reopens. I'm going to looking at the reports from, let's say, the IEA or from S&P Global Energy, who estimate every month what production is and how much of a bounce back and how quickly the bounce back is going to be from the major producing nations that have had to shut in supply because they had no place to put the stuff. You can't just turn an oil well back on like flipping a switch. So what's going to be the long-term impact of that? I think that's something we're going to have to watch for. That's going to be for more than 4 to 6 weeks. We're going to have to see, let's say 3 months, 4 months from now, where do we stand? What have the countries done to get their production up to full? So that would be Iraq, that would be Kuwait. The Saudis, of course, they have their own export line through Saudi Arabia that goes over to the Red Sea, a place called Yanbu. The United Arab Emirates also, they pulled out of OPEC, so they want to go. They don't want any restraints. What are they going to be able to do? So I think that's kind of the longer term impact. Now, the Bank of America report that I mentioned earlier, they make the point, and this was kind of in the International Energy Agency report for June, which came out about a week ago, that all the forecasts for 2026 were for a significant surplus of supply over demand, mostly because of increasing supply out of the U.S., increasing supply out of Canada, out of Brazil, out of Guyana as a key new source. And their argument, I think, was that they're predicting maybe $70 average Brent next year, which is a little higher than we were before the war, but not that much higher. And they're kind of falling back on the idea that the supply demand balance will probably get back to where it was at the beginning of 2026 when we thought we had a significant surplus. And if so, that's going to put a large amount of downward pressure on the price. I'm concerned about 2 things. I'm concerned about, as I said before, the ability of these countries to get their production back up and running. And I'm also concerned about what kind of risk premium the market puts on barrels that have to go through the Strait of Hormuz. It's been closed once. That's kind of a sign they can get closed again. And I don't think that's just going to disappear from the market and from the market's calculations. It shouldn't.
It was very, very well said, John. I want to ask. We recently had Jared, of course, with RXO, and some points that were made during his segment today on the show. A lot had to do with spot. We covered that quite a bit. My question for you is, when it comes to spot as well as fuel, how connected are they right now?
Not really sure. I would not think. I don't really know why they would be connected. One is a cost that they try very hard to pass through. Certainly, anybody with a fuel surcharge enables it to pass through. The spot number obviously was going to be driven higher by the cost of fuel, but that's just a variable on top of it. Ultimately, I think ultimately it's going to be a supply demand issue in trucking, and it's a supply demand issue on fuel. I would think that the two remain somewhat separate. I wouldn't say they're totally separate, because if the price of fuel gets too high and an independent owner operator has a less of an ability to pass through that cost because they don't operate on a fuel surcharge, it's very difficult for them to, as opposed to somebody like an RXO, as opposed to a major carrier. That independent owner operator is much more likely to take that truck off the road. So it's not completely independent, but I don't know. I think that they're running on two separate tracks.
I agree. I have very strong opinions about this. I think that a lot of the narrative, because people don't really understand fuel, is like, yeah, of course rates are up because fuel's up, so you're not really netting as much.
Right.
Irregular route one-way trucking is not cost-based.
No.
So if your costs go up, it doesn't really matter. The reality is that because there is lack of capacity, and tender rejections are up, carriers or brokers are able to command a higher rate from shippers right now.
Yes.
So yes, they can use fuel as a reason for why they're asking for the high rate. But in a down market,
It's not that.
even if fuel went up, you're not going to be able to raise your all-in spot rate because you need the load, right? So
Sure.
I don't think that they're that connected in regards to that. I think people talk about it that way, and I think shippers want to validate their rising costs with carriers by saying it's fuel.
Right.
But the reality is it's all based on supply and demand, as John was saying. But what do you think the freight market is reading into the current diesel levels?
But let me just go back for a second. I mean, when do we trace back the current increase in freight rates to? Around mid-November, late November? Well, the price of diesel wasn't high then. And in fact, it was kind of weak, and it was declining really up until the war started. I'm sorry, what was your next question, Julie?
Well, now I would say, when was it? Earlier in the freight recession, and I can't remember the time frame, but I got I rarely comment on X, but this was one that I did. When diesel levels were at their highest that they had been in like 5 years, rates were still at their lowest.
Yes,
so I agree
this
with
is
you.
correct.
Diesel in the freight market. What do you read on diesel levels? Do you think it's going to become do you think actual diesel levels and tank bottoms, I think is the terminology, are going to have an impact on the freight market and actually change anything here?
I guess the only thing I'd say is that carrier who's still kind of, on the margin, maybe a little shaky, my colleague Noy Mahoney, even in this market that's been soaring, is writing more bankruptcy stories than ever. As Craig has said, balance sheets get battered, and just because the freight rates went up doesn't mean you can get past that bad balance sheet. I would say probably if you get a significant shoot up in prices, and maybe supply becomes getting the stuff has not been an issue. That if getting actually material becomes an issue on the margin, you could lose some capacity. So that would probably drive up some freight rates even more. So, you could almost argue, depending on how you talk about it, you could almost see an inverse relationship between the two, and not necessarily, in some ways, an inverse relationship, in some ways, a tight correlation.
All right, John, we got 30 seconds. If you are a shipper or a dispatcher or whoever planning your fuel budget now for next year, what do you do?
Well, for next year, I think that you probably assume some degree of normalcy, but I think you still assume, if you just look at Brent, let's say, which is the international crude benchmark, without getting into predicting the price of diesel, just look at the price of Brent and assume that it is going to be higher than it was without a war. That doesn't necessarily mean $100, but it could probably mean like 70, where given the supply-demand imbalance that was going to be in place in 2026 and probably into 2027, that it's going to be probably $10 higher, $10 a barrel higher than it might have been without a war. So all this, it's going to come down so much. It's going to come down so much. I'm sorry, I just don't buy that.
All right. Thanks, John. I wish we had more time, but we will look forward to having this talk again next week.
All righty.
John, thank you so much, man. And thank you guys for being here. Quite the show we have had today. I don't believe we had 5 guests.
Yeah, we got through a lot.
I mean, that was a lot. And tomorrow here on FreightWaves Today is going to be much more of the same type of conversations because Julie's headed to Vegas and she's going to join Craig Fuller and the rest of the team, of course, at SMCSA's Beyond Conference at 3 p.m. Eastern. It is going to be awesome. And at the 12 o'clock slot, for those that don't know, What the Truck is going to be making an appearance. So we're going to hold it down at 12 p.m. as the pregame, and the actual game is going to be taking place at 3 p.m. tomorrow from Las Vegas. Craig Fuller as well as Julie Vandekamp, and much more is in store. That's all for us. Thank y'all so much for Julie and myself. We'll see you tomorrow. Bye-bye.